Hey everyone, welcome back to another early live stream. Bloomberg took the words right out of my mouth when they gave us another Bloomberg terminal code. This time it was NAP, N-A-P-P. Unfortunately, it just disappeared. Otherwise, I would like to have shown it to you. That's what I feel like, though. Anyway, so we've got inflation numbers coming out literally in about 60 seconds. So this should be pretty fun. The numbers that we are expecting. Take a look at what we're expecting. We have, first things first, we've got month over month. The expectation is 0.8. Year over year, the expectation is 0.79. And year over year, excluding food and energy, we are expecting 6.4. So this data coming out here in just a moment here. So, it should be fun. We were looking for that rise in February. We're not expecting this number to be the real shock and awe that we're going to be getting next month. That's going to be the real fun one when oil really starts pricing things up. And again, we're looking for 0.8. 0.8 is the expectation. Let's see what we get. We're looking right here. All right, it is time, and we got, where is it? Nothing yet. Da, 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 da. Here we go. Still nothing. Come on. Well, they still got 30 seconds technically. How many people are doing this right now? Come on. I'm just sitting here refreshing for the first minute and look like an idiot. 0.8%. It came in at expectation, and 7.9% headline number. Literally exactly at expectation. X food and energy also came in at expectation. Don't worry, it's not rigged at all. Wow, that is absolutely incredible. It literally nailed it. Largest increase since August of 1982. So that'll be your sort of headline news that we'll hear. That sort of nonsense all the time. Let's go take a look at the actual numbers here, because the numbers to me is where the fun is. So I like to look at the month. So let's scroll over here just past the report a little bit. And we're going to go over here and see what we got here. Okay. These are going to be month over month changes here on the right side. So this tiny little number on the right, this is going to be what we want to look at, because it'll give us sort of that month over month look at those individual categories. And that is something that I want to see right now. So we got, let's see here, individual categories. Let's get a little closer here. All right, so we've got food coming in 1% month over month, all items 0.8. This is what was expected. So we literally nailed the expectation, which is really good. Didn't come in high, didn't come in low, came in at expectations. This is all under food. Energy on the month over month, you definitely see some impact already here. And this is just the start. You could see, because remember how they take this data. What they're going to do is they're going to take 3 weeks or 3-week periods, 3 10-day sort of periods within March. Or sorry, within February, and they'll sort of average that. And even with that average of February, we still got energy up 3.5% on the month over month basis, fuel 6.7%, oil up 6.5%. Obviously, we know these are up more like 20 to 30%, but most of that will get captured next month. Look at this, though. We've got actually some minuses here. This is good, though. This is what we want to see. So what do we got here? Okay, well, that's just linens. So that's, window coverings down 5.5%. That's quite interesting. Over here, you've got living room, kitchen, dining room, and other furniture. Finally, some more negative data here. Negative 0.2 and 0.3. Dishes, flatware, indoor plants, clocks, and lamps all of a sudden got a little more expensive. What do we got here? Ooh, here's another negative. I like this. Men's suits and outerwear. What do we got here? Negative 1.7. I like the amounts of negatives that we're seeing here. Now, you're still seeing some larger bumps here. See that 2.4, 2.5. Men's pants and shorts, okay, and men's underwear. Got it. Okay, so suits are getting cheaper, but pants and shorts are getting more expensive. What do we got for ladies here? Ladies outerwear and dresses getting less expensive here after a big bump last month too. Jewelry and watches down 4.2%. Specifically, jewelry down 5.7% itself in that category. Used cars and trucks. Look at that, folks. This is like the first time we've actually seen that thing go negative. Holy moly, used cars actually went negative. That's amazing. Negative 0.2%. New cars were 0.3%. You've got, we want to see services too, which we'll look at in just a moment. This is actually really good because the more negatives we see here, the more Powell and them are going to be looking at this going, ha ha ha, see? Ha ha, it's transitory. Whoa, look at all these negatives. This is incredible. Education, communication commodities, all of these over here negative. Computer peripherals, smart home assistants, computer software and accessory negative 0.5, but computers themselves still up. Right here, you still got that 0.8%. So that's a lot. Remember, that's all on a month. Make sure here. Yeah, see, this is all on a month-over-month basis. Newspapers up 5.3%. Some weird categories that are up here. Again, looking for, okay, rent-a-shelter here. Rent-a-shelter finally actually getting a little bit more of a realistic measure here because we know this has been lagging. 0.6%. That's more realistic. Lodging away from home, you got a little big bump here, little big, including hotels, motels, still getting a little bit of that reopening trade after Omicron, really pushing those numbers up here. Owner's equivalent rent still only 0.4. I think it's kind of ridiculous that this isn't up more, but okay. Professional services, negative 0.1 here. Moving, storage, and freight, negative 0.6. Wow, good. Car and truck rental, which had gone negative a little bit in the past months over here, is up about 3.5. Motor vehicle repair up about 4.3. One of the big reasons we're seeing insurance companies raising prices so much, anywhere between 17 to 25%, is because it's getting so expensive to repair cars because the parts have gotten so expensive. So more of that reopening trade here. Look at that. Airline fares up 5.2%, although some of this could also be part of geopolitical concerns. Let's see. Anything else that's pretty wild here? Delivery services, postage down 1.7, delivery services up 1.3. Did I align that properly? Yeah, postage down 1.7. That's right. Okay, any other big negs here? I see, or big positives? None. What do we got here? Durables. Okay, well, now we're back to categories, special aggregate categories. Huh, that's really interesting. Financial services, 1.2. Right before tax season. This is fascinating. And one of the reasons I find this fascinating is not only did the entire report really hit the estimates properly. I mean, we were expecting 0.8%. We got 0.8%. We were expecting 7.9%, and we literally got 7.9%. I mean, the survey was just literally on point. Really, really incredible. But outside of that, I will say there's probably, I mean, so far, more good news in this than potentially bad news. And the reason I'm looking at that is we're seeing a lot more negative sectors or sections than positive sections, which I like that. Or maybe not necessarily more negative than we are positive, but I should say we're seeing more negative in areas that we haven't seen it before. I'll re-show that here. Just want to make sure I'm not missing anything. All right, so when you go into these individual categories, the first categories you really see your food. And I did kind of skip over those really quick, so I'll quickly look. Citrus fruits, a lot more expensive there last month. I'm curious if we got wheat in here. We'll look at wheat under the individual category in just a moment because that's obviously something that we've seen gone up a lot. Food at employee sites and schools. Well, that just keeps getting less expensive. So Okay, but yeah, here the point here is look at this. This is the first time we've seen window coverings go negative since well, no, actually that's not true. We did have a negative month over here as well. In well, oh wait, so no, that's the unadjusted change. Don't even look at that. Look over here. Look on this right side, and then it'll give you kind of the last three reports here. So that's the first time it's been negative in the last three here. Window coverings was negative over here, or floor coverings rather. We've seen this slightly negative before, the men's suits, but women's dresses going negative. That's actually a nice one here. Jewelry, kind of interesting. We haven't seen this go negative before. So okay, so some new categories going negative here. I wouldn't say anything really a surprise here. I mean, I think you're going to have the Federal Reserve looking at this, suggesting that, well, housing away from home getting more expensive and airline fares getting more expensive is expected because we just reopened from Omicron. Energy prices and food prices going up is expected because, well, we've got a crisis and war. So I really think this is a perfect report, honestly, for the Federal Reserve to just come out and complain about the usual, about how here's just evidence of more transitory action. If you actually look at the sticks here, you really see this benign movement in the first few minutes to the upside. The fact that we didn't, like, in a nasty way, get destroyed by inflation today. And now we're kind of bleeding right back down to the downside. QQQ is down about 1.2% here in the open. I did say that I thought there was a chance we might end up having a buying opportunity just because of the amount of fear that comes around this. Holy smokes, Embraer just dropped about 10%. I'm looking at that one. I don't own it, but ERJ is an interesting emerging market play for me. So I've been watching it. So who knows? Maybe that's an entry. Okay. JD.com. I am still concerned about the Chinese consumer, so I prefer the American or other stocks over the Chinese stocks. You did have a nice rally yesterday on some of the reopening stocks, so I wouldn't be terribly surprised to see a tiny little bit of a pullback here on some of these. Yeah, not that big of a deal. You've got CrowdStrike kicking butt. We're going to look at that one quickly, just to see if any of these are having any kind of special reaction here. But otherwise, not a lot of green today heading into the open here. Let's look into quickly how's Trade Desk. Trade Desk down a couple percent. That's fine. And Tesla down about 1%. Okay, big deal. Quickly, we'll look at what the suits are saying. I mean, I don't honestly know that it really matters what the suits are saying about inflation. I think we pretty much nailed it. CPI hitting expectations may bring limited relief. Well, for once, CPI came in pretty much bang on expectations, with headline and core hitting the consensus on both month over month and year over year. Kind of leaves us pretty much where we were. Yeah, you don't say. Yeah, that was fortunately a big nothing burger in terms of potentially getting some kind of shock or to the upside or downside. I mean, even within the report, there was nothing that screamed scary that would, in my opinion, make the Federal Reserve freak out. Okay, so Embraer says Ukraine to not halt shipping in the meantime, but Embraer seized delivery of 60 to 70 commercial jets in 2022. Okay, so I wonder if this was less than expected. It must be, because if they come out with a new delivery update and you see the stock come down, that's probably what's happening. I know they're dealing with a lot of inflation in parts as well. And then CrowdStrike looks like it got a bunch of price target lifts. Although they did. They reported last night. Okay, there you go. That explains it. Which should, cybersecurity has been one of those interesting plays that hasn't actually gone up as much as you think it would during this Ukraine crisis. One of the things that I will say is after earnings, we tend to get these bumps. Yeah, their forecast came in for their fiscal 2023, 2.13 bill to 2.16 versus 2.01 expected. So you had a beat over here on Crowd. That explains it. And EPS beat on forecast. Yeah, okay, CrowdStrike just killed it. But anyway, yeah, you see this weird thing where you see after earnings, stocks do incredibly well for like a day or two, and then they come right back down. I think the perfect example of that is, well, Square's not back all the way to where it was, but yeah, that's because yesterday I had a little bit of a green day. I was gonna say it was Square because I was watching this one yesterday, and I'm like, man, this thing rallied from on earnings from like $82 all the way to 130, and now it's coming right back to 100. But it actually it slowed down its pain trend. It did close at $98 a couple days ago, which is pretty wild. And then yesterday it closed at 108 again. So it just absolutely crazy the amount of volatility we're getting in this market. Not healthy for a long term for a long term sort of bull market. Generally, when you're in a longer term bull market, you see a lot more consistency in the market. The extreme volatile up and downs, not so good because they make it a little harder for institutional investors to stay institutional investors and provide predictable returns. That is, they end up tending to move to the sidelines. We can check out our sponsor, though, FTX, for today's video. Shout out to FTX. Get your free cryptocurrency linked down below. When you go to FTX, you can watch on the 1-minute chart right now as BTC is taking a little bit of a nosedive. You can see as the CPI report came out, we actually ran to about 40,200, and that came off of about 39,200. The BTC price is bobbing around 38.5 right now. We'll keep an eye on this. It might be a little bit of an over sell down personally. I mean, the CPI report was perfectly on expectations. We really don't expect to see a U-turn yet to the downside. My expectation would be until, especially now with war, probably not until May to July. Somewhere in that time frame, that's when I would expect to see a U-turn. Which I'll tell you, last time I'm tired. Last time I expected a U-turn, it was supposed to be at the end of 2021, but boy, oh boy, Delta screwed that. When Delta hit us in September, that delayed everything. Now war's delaying everything. Unfortunately, the transitory inflation is just becoming more and more persistent. And remember, we have those two types of inflation. The first set of transitory, now persistent inflation, which is the supply chain issues, and of course the issues related to the pandemic and base effects. And then, of course, you have this new transitory type of inflation, which is high oil and gas prices, which I personally don't expect to substantially last. Oh, and in case I didn't mention it, make sure when you check out FTX, use the link down below and you'll get some free cryptocurrency when you sign up. But taking a very brief look here, we've got, look at that 10-year treasury. Holy smokes, it's almost back to 2%. Just the other day, I actually shorted the treasuries with a $1 million bet, and that they would go back to 2% very quickly. And I'm actually surprised they're almost back to 2%. So great. That is good. That's very good for that bet. Of course, if you want all my bets and moves that I make, check out that Stocks and Psych link down below. You get lifetime access to that. And then if Brent here back to 116. We're gonna see this plus and minus 5% for quite a while. All these like doom and gloom fears though about oil hitting 150, oil hitting 180. Personally, I don't think it's likely. Personally, I'm not too worried about that at all. And the longer we have a Fed that says, "Hey, we can hold out on rug pulling the economy, rug pulling the markets, and forcing a recession," the better. That's the last thing you want the Fed to do, and they will do it. And they can kill inflation in 2 months. I promise you, they can make inflation go away in 2 months. But it's going to be raising interest rates to 8% and Paul Volckering us, and inflation will be gone. And when you really start getting concerned is when inflation expectations become unanchored. That's what the Federal Reserve does not want. That is what the Federal Reserve said happened in the 1970s. They said the Federal Reserve failed in the 70s. So the new Fed looked back at the 70s Fed is like, y'all failed because you let inflation expectations run wild and run rampant. Yeah, well, right now we can look at the 5-year break even for treasury yields, and this tends to serve as an inflation expectation graph. And while we did have a little bit of a surge here at the beginning of war, we are actually getting a second day of an inflection point to the downside. So I'd say this is all good news along expectations. Thank you so much for being here, folks, and good luck trading. We'll see you.